This video is a step-by-step blueprint for how to wisely go through the home buying process. A house can either be an asset or a liability. Home ownership, when done correctly, can be a blessing, but when done incorrectly, can be a curse. And so I'm very passionate about teaching people how to wisely go through the process of preparing for home ownership, how to wisely build financial wealth through real estate, how to wisely make moves regarding real estate, because the most effective tool for building generational wealth is real estate. In fact, research studies have shown that around 90% of current day millionaires in the United States became millionaires through real estate. So I'm very passionate about this video because in this video, I'm going to take you through a step-by-step blueprint for how to wisely go through the home buying process. I call this the real life Monopoly game. So let's jump right in. Step number one is track and plan your money. Track and plan your money. You see, in order to become prepared to buy a home, one of the first things you need to do is make sure that you are financially stable, because home ownership comes with a lot of financial responsibility, and you need to be financially stable in order to handle the financial responsibilities that come with home ownership. So how do we become financially stable? Well, one of the things we must do is track our money. You have to track your money because tracking your money will enable you to become aware of how much money is coming in and how much money is going out. That awareness helps you to control your money, because in order to control your money, you must understand and be aware of what's coming in and what's going out. And when I say control your money, I mean budgeting. Right? What is a budget? A budget is basically telling your money where to go instead of wondering where it went. In order to budget your money, you must first become aware of the amount of money that's coming in and the amount of money that's going out. You have to track your money, because tracking your money builds awareness, and awareness builds control. That control will enable you to budget properly, and that will lead you towards financial stability. If you need help with personal finance or money management techniques and how to effectively do a budget and how to become financially stable, I highly recommend that you search Dave Ramsey on YouTube and on Google. Dave has a ton of great techniques. For example, one of the techniques he teaches is the envelope system, which is an amazing system for managing your food budget. Also, he has a program called Financial Peace University, which is offered in many churches as well as other types of institutions, and it is very useful. So step number one is track and plan your money. Step number two is nurture your credit. Nurture your credit. Your credit score and your credit report is very important in the mortgage process. So it's important to nurture your credit. You want to start early to do things that will help you to maximize your credit score. When I say credit score, I mean the FICO credit score. There is another type of credit score called the Vantage score. But for mortgages, the most common type of credit score is the FICO score. And what makes up the FICO credit score? 35% of your FICO credit score is based on your payment history. That is why it is very important to pay your bills on time. You have to pay your bills on time. If you think you're going to be late, call the company ahead of time and try to work something out, or try to reach out to people that can help you. You do not want to pay your bills late. You want to pay your bills on time. because 35% of your FICO credit score is based on your payment history. 30% of your FICO credit score is based on your credit utilization, which means the percentage that you are using of your total available credit. So try to use only a small portion of your total available credit. If you can keep your credit utilization under 30%, that will be great. If you can keep it under 9%, that will be even better. 15% of your FICO credit score is based on your credit history, meaning how long you have had credit accounts open. 10% of your FICO credit score is based on new credit, meaning how much of your available credit is new credit. And the remaining 10% of your FICO credit score is based on your credit mix, meaning what's your mix of loans, such as installment loans as well as revolving accounts. Basically, they want to see how well you pay back different types of debt. But really, the main two things is your payment history and your credit utilization. Those two put together make up 65%. 65% of your credit score is based on your payment history and your credit utilization. So make sure you pay your bills on time and only use a small portion of your total available credit. You can obtain a free copy of your credit report from each of the 3 major credit reporting bureaus every year at this website, annualcreditreport.com. It is the official credit report website that the federal government endorses. If you have bad credit, don't worry. We can work out an action plan to improve your credit. Your credit score is a measure of how well you pay back debt, and your credit report tells the story of how well you pay back debt. So number 1 is track and plan your money. Number 2, nurture your credit. And now number 3, select a lender. I'm a mortgage loan officer. I would love to work with you. Feel free to contact me. And before you go reaching out to lenders, I would recommend that you get a sense of the current typical rates in your area by using the CFPB rate checker. You can Google CFPB rate checker, and it will take you to the website where you can put in the details of your situation, such as your credit score range, your state, the home purchase price, the down payment amount, the rate type, the loan term, and the loan type. And then the CFPB rate checker will give you the typical current rates that are being offered in your area. So it will give you a general idea of the typical current interest rates that are being offered in your area, and then find a lender. Of course, you want to find someone who is experienced, someone who has a proven track record. But also, just as important as their experience is their personality. You want to find a lender who is experienced and who has the heart of a teacher, someone who's going to explain things well to you, someone who is going to respond to you quickly, someone who is passionate about guiding you and teaching you every step in your journey to home ownership. So number 1, track and plan your money. Number 2, nurture your credit. Number 3, select a lender. And now, number 4, get pre-approved. It's important to get pre-approved before you go house hunting. You want to get pre-approved because by getting pre-approved, you will be aware of exactly how much house you can afford. In fact, real estate agents are not going to want to start showing you homes unless you at least get pre-qualified. There is pre-qualified and there is pre-approved. Pre-qualified is more general than pre-approved. In a pre-qualification, a lender has taken a general look at your situation and has given you a pre-qualification letter. But in a pre-approval, a lender really digs deep and really examines your situation and then gives you a pre-approval letter. Therefore, a pre-approval letter has more significance than a pre-qualification letter. So you want a pre-approval letter. To get pre-approved, a lender is going to ask you for certain documents, such as 30 days worth of pay stubs, 2 years of W-2s if you have a regular job, or 1099s if you are self-employed. Also, 2 years of tax returns and 2 months worth of bank statements and a copy of your driver's license. By the way, regarding the bank statements, they really just want to see the bank statements that relate to the money that you plan to use for your down payment and your closing costs. I would suggest that you organize these documents into a Dropbox folder or a Google Drive folder, because that way you have everything organized, and that way you can easily access it as you reach out to different lenders and fill out loan applications. So number 1, track and plan your money. Number 2, nurture your credit. Number 3, select a lender. Number 4, get pre-approved. And now number 5 is compare loan offers. Now that you've reached out to different lenders and they have each given you a loan offer, you want to compare them to see who is offering you the best deal. Different lenders may give you a loan offer in a different format, and it might be difficult for you to compare one offer with another offer if the offers are not in a standardized format. So that's why you want to ask each lender to give you the loan offer in a TBD loan estimate, because all lenders know the standard format of a TBD loan estimate. So they will be able to put it in that standardized format for you. And in that way, if you have all your loan offers in the standard TBD loan estimate format, it's going to make it easy for you to compare the interest rate and the cost of each offer. And by the way, you want to compare the lender's fees as well as the lender's interest rates. Don't just look at the interest rate. Also look at the lender's fees as well, because you have to look at all of that in order to really compare and see which one is giving you the best offer. Also, take note of the personality of each lender. Do they have the heart of a teacher? That is important, because if you don't enjoy working with them now, you're definitely not going to enjoy working with them as you go deep into the mortgage application process. So you want to find someone that has the heart of a teacher, someone that's patient, someone that responds quickly. Now, step number 6 is select a real estate agent. The same main rule when selecting a lender applies to selecting a real estate agent. You have to find someone who has the heart of a teacher as well as being very experienced. So now, step number 7 is you go house hunting. Make sure you follow your real estate agent's MLS updates, because their MLS updates are more accurate than the public websites like Zillow and Redfin. Maintain a notebook of things you like and dislike about each house, because as you go house hunting, you're going to notice things and you want to maintain good notes regarding what you like and what you don't like about each house. Don't rush into this. You want to find a house that you really like. So you want to keep a notebook so that you will be able to look back and remember the key characteristics of each house. And make sure you do not get emotionally attached to any house. This is a major purchase, and you want to make sure that you're making a wise decision when you purchase a home. So you have to be careful to not allow your emotions to cause you to make an unwise decision. Step number 8 is prepare and make an offer. Ask your agent how you can make your offer more competitive. Smart agents will have good techniques regarding how to make your offer very competitive. Consider writing a compliant offer letter. Basically, consider writing a letter to the listing agents, a letter in which you share your heart regarding why you like the house. But make sure that you don't violate any fair housing laws, though, with that. So make sure that it's compliant. Talk to your agent about making sure that your offer letter is compliant. Also, here's another tip. Ask your lender to call the listing agents, because that will add more confidence in the eyes of the listing agents regarding your financial stability and your ability to really close on the house. Although they will have your pre-approval letter, if you get your lender to call the listing agent, it will even add more assurance that you are a good borrower, and that if they accept your offer, your financing will go through. Step number 9, get a home inspection. So in a home inspection, a certified home inspector examines the house to identify any issues. Step number 10 is negotiate terms. So based on your contract and based on the home inspection report, at this point, you might be able to renegotiate the terms based on what is found in the home inspection. If there are certain things that need to be fixed, you might be able to renegotiate your terms at that point. It depends on the terms of your offer. Step number 11, understand the underwriting process. So if everything else pans out and you go into the underwriting process, that's when they really go deep into evaluating your loan. So already you have a pre-approval, but now they go deep into working towards giving you a full approval. Step number 12, understand the appraisal. The lender is going to order an appraisal because the lender is not going to lend money to you based on an amount that is more than the appraised value. Understand the appraisal when the appraisal comes in. If the appraised value is more than the purchase price, then you're good. But if the appraised value comes out to be lower than the purchase price, then that's going to be an issue. In that situation, you're going to have to work things out because the lender is not going to lend based on an amount that is more than the appraised value. Step number 13, understand what happens just before closing. Just before you go to closing, they're going to give you a closing disclosure. And it's important that you review the closing disclosure and compare it to the loan estimate and ask any questions. Ask about anything that you don't understand. You have to make sure that you understand these documents. So make sure that you ask any questions, and hopefully you've chosen a lender and a real estate agent who have hearts of a teacher so that they will be able to explain that to you. Step number 14, understand what happens at closing. At closing, that's when there's a final review and there's the signing of all documents. And even at closing, if there's anything you don't understand, make sure you ask questions. Step number 15, understand what happens after closing. One thing is that your first payment is usually due by the end of the second month. Make sure you pay attention to your escrow account, which has your taxes and your insurance. If you have a fixed rate loan, your interest rate is not going to change. It's fixed. But here's the thing, your payment might change based on the taxes and the insurance. So you want to pay attention to the taxes and the insurance. Step number 16 is consider house hacking. Now, this is something that's not for everyone. I do want you to consider it. Basically, house hacking is a strategy in which you live in one portion of your house and you rent out the other portion, and the rental income that you generate helps you offset your housing expenses. Step number 17 is consider leveraging your equity. As time goes by and as you build equity in your home, consider leveraging the equity to buy more homes and build a portfolio of rental properties, and consider hiring a property management company to help you to manage your rental properties. Step number 18, continue to learn about real estate. This is important because real estate is the most powerful wealth building tool. There are some great YouTube videos. One of the YouTube channels that I highly recommend is the YouTube channel of the loan officer, Kyle Seagraves. His YouTube channel is called Win the House You Love. In fact, a lot of the information for this video came from Kyle's YouTube channel. So I highly recommend that you check out Kyle's YouTube channel, Win the House You Love. Step number 19 is check out my website. Let's keep in touch. And now the final step. Step number 20 is to remember to stay in your lane. As you go through this process, stay in your lane. Don't let anyone or anything rush you. Stay in your lane. Comparison is the thief of joy. Don't compare your progress with anyone else's progress. Realize that everybody's timeline is unique. So don't get into the trap of feeling as though you are behind schedule. Be patient, take your time, stay focused, and enjoy the process and celebrate every step of the way. So there you have it, a step-by-step blueprint for how to wisely go through the home buying process.